Hello guys, you all welcome to another episode of our beginner class. In our today class, we are going to be talking about types of chart that we have in the forex market. Okay, so that the chart that you can use to analyze your peers. Okay, so now let's move to the chart and talk about it, guys. This is trading view. Okay, this is trading view. So I taught you guys in our previous class what trading view is being used for. Is used for chart analysis. Okay, so now, when you open your trading view, this way is going to this way you're going to see it. Okay, so we move to chart. Okay, so when you move to chart, guys, there's different types of chart whenever you are doing analysis. Okay, so there are like three major chart that we can use in our analysis. Number one is line chart. Number two is bar chart, and number three is candlestick chart. Okay, so like the one you are seeing here is just this is a candlestick chart. Okay, so we are still going to talk more about it. Okay, so now let's make mention of the different type of chart that we have, one after the other. As you all know, whenever you are doing your analysis, you use your chart to do your analysis, okay, to determine the direction of the market. Maybe you are going to buy, maybe if you are going to sell, okay, and also to know when to enter the market. Okay, so each of these charts represent what the price movement. Like the way the chart is coming down now, it shows that what US 100 is coming down. Okay, so look at here now, when the US 100 is going up, so it shows that what US 100 is going up there. Okay, so this is what chart is being used for. Okay, so now let's start by introducing the chart that we do use. Okay, so number one of the chart that we do use is line chart. Okay, so if I want to change this chart now to line chart, I'll just come to this to here where my cursor is, then I'll change it to line. Okay, you see now everything has changed to line. Okay, so each of the line now represents what the price movement. If you see the price movement is what is going down. Okay, so line chart is normally used majorly for the direction of the market, to see the direction of the market, if the direction of the market is going down or the market is going up. Okay, so majorly I don't use line chart for entry. Okay, so it's just to determine the direction of the market if you're going to use it. Okay, so that is for that about line charts, just to determine the direction of the market. So the number two chart that we have is known as the bar chart. Okay, so the bar chart is different. The bar chart also, you see, it's still the same chart. You see bar chart now, we have the open and the close of the bar chart. Okay, if you look at this bar chart here, look at here. So each of the close, this is one full bar chart. This is one full bar chart here. Okay, guys, let's see it. This is one full bar chart here, guys. This is it here. Okay, and if you look at it, there's vertical line and also there's a horizontal line in the chart. Okay, so the horizontal line that is there and the vertical line, they all represent the open and the close of the bar. Okay. So also, before we talk more about this, let me introduce you guys to time frame. There is different time frame in the market. Okay, so there is daily time frame. This is the daily time frame. If I put in the daily now, each of the bar pattern is going to be represented what daily. Okay, if I put it in 1 hour, each of the bar the bar is going to be represented what for 4 hours. If I put it in 1 hour, so if I put it in 1 minute, still the same thing. So if I put it in 30 minutes now, each of the bar pattern that is going to be printing, like this bar pattern, so each of them is representing what 30 minutes. Okay, so here now let's use the daily bar pattern as example. Okay, so the daily bar as example. If you look at here now from this daily bar, guys, look at here now from this daily bar, this is the market. Your bar always have an open and also it also have a close. Okay, it's always like this. Let me change the color so you guys can see it clearly. So it always have an open and also have a close. Let me use a tick. Listen for you guys. So it always have an open, sorry, and also it always have a close. Okay. Now, this is the way it is. If the market open, okay, if the market open, this is where the market open, okay, in a bar. So if the market is open, the line is going to be in your left hand side. Okay, so now when the market open, now the market literally move down to this zone. It move up to like this level before the market would they reject the market up when the market went up. Okay, so that is why you see when the market moved down to this level, that is why you still see this line there. Okay, so then they reject the market up. Don't forget that this is where the price opened from. That is why you are seeing this line there. Okay, so from there now the market move up, then the market move up to this level. Okay, before the market later came down, then this is where the market closed. Okay, so automatically now this is the open of the candle. Sorry, I say candle. This is the open of the bar. Okay, and the bar and the market traded up to this level. Then market went up, then traded up to this level. Then before the market closed, there. Okay, so that is typical example of bar. Okay, as you can see here, as you can see from this example, the market opened from this level, then it went up. Okay, when it went up, it came down to this level before the market later rejected, before the market closed up to this level. Okay, so still the same scenario apply to all bar pattern. Okay, so it always have the open, the close, the high of the day, and also the low of the day. Okay, so this is the low of this is the lowest low it created. This is where the market opened from. Okay, so this is the highest high that the market went during that period. Okay, and also this is the close of the bar. Okay, so here now we are using daily the daily bar as example here. So assuming this bar now represent 1 day. Okay, so this is the lowest low that the market moved to that day. Okay, and this is where the market opened from that day. Okay, so this is the lowest low that the market went before they later reject the market up. Then this is the highest high that the market reached that day before the market later retraced down and closed in this level. Okay, so that is for that on the bar pattern, guys. So in our next the next chart that you can also use in analysis is known as candlestick, and that is what we do use, and that is what we recommend. Okay, candlestick is known as, and it can also be called as Japanese candlestick. Okay, so each of these candlestick now represent what each of the each time frame. Here we are using daily time frame, so each of this candle represent what time frame. Okay, the Japanese candlestick is very, very good in your analysis, and also whenever you are taking your entry, in which we are still going to talk about later on in our next class, how you can make use of your candlestick pattern. Okay, so the candlestick pattern is just is an information that the market is printing. Okay, so you have to interpret it if you are going to buy, or maybe if the market is going to sell. Okay, so that you can make use of the advantage. Okay, so currently here, this is a candlestick chart pattern. Okay, this is a candlestick pattern. Okay, so this is a candlestick chart. As you can see, the market is coming down. Okay, so majorly in our candlestick, there's other changing of color though, but for those of you, for the novice, if you want to know more about the candlestick, I'll advise you, if you are doing analysis, you can change your candlestick to red. So if the market is coming down, you know that okay, the market is red. Okay, so if the market is going up, then you know the market is what is green. Okay, so that is why I choose my color like this. So some other traders, you can change the color if you want to change to black and white, anyone that you prefer. But this is very, very okay. Okay, so that is for that. Then let's explain the candlestick chart. Okay, so the candlestick chart, as you can see, the candlestick chart, you can easily use it to determine the trend of the market, and also you can also use it to confirm your entry. Okay, so in your candlestick pattern, there's always an open and also a close. Okay, let's use this candlestick as an example. Let's use this candle as an example. So as you can see this candle now, gentlemen, let me zoom. As you can see this candle, okay, this candle, this is where the candle opened from. Okay, so and the market is coming down. It went down to this level before they reject the market up. So this is where the market closed. Okay, so the same thing applicable here. This bullish candle, this is where, immediately when this one closed, that is where this bullish candlestick opened from. Okay, when it opened, what happened? The market came down, literally came down to this level. Okay, don't forget that this is where it opened from. Okay, so when it came down to this level, then they reject the market up. So the market went bullish to this level. Then before they rejected the market down, then it closed this area. Okay, so one thing about Japanese candlestick is this: whenever you whenever you have the open, don't forget that this is the open of the candlestick. This is where the candlestick open. Okay, this is the open. So if the market trade below the open, if the market trade below the open, it's going to be bearish. Why if the market trade above the open is going to be bullish? That is why we see, like, after the market traded up, the market closed above the open. That is why you still see this candle bullish. Okay, so the same scenario applicable here. This is where the market opened. The market traded down to this level. Okay, on trading down to this level, then the market later rejected and closed. Okay, so that is why it is what bearish. Assuming the market closed above this our open here, which is this, this is the open of the bearish candlestick. So assuming the market open close above here, is going to be bullish. Okay, so the same thing applicable here. Let me show you guys more example. So look at here, guys. So the market opened from this level, it traded down to this level. Okay, so later on the market went bullish. When it went bullish, then it left a wick and came and closed. Okay, so it's because it closed above the opening price. That is why the market is bullish. That is why it is green like this. Okay, so in your candlestick, there's always the body of the candle, and also there is a wick of the candle. Okay, the body of the candle. Okay, for example, with what I'm showing here, this is a body of a candle. Okay, sorry. This is a body of a candle now, for example. Okay, so this is a full body of a candle. Why the highest high that the market went to, or the lowest low that the market went to, is the what? Is the wick of the candle. Okay, so this is the wick of the candle here now. Okay, that showed that, okay, what does this wick mean? It means that what? When the market opened before, initially it traded down to this level, right? Before they rejected the market, or before they reject the market up, then the market closed this week. That is why we saw this week there. Okay, so that is your candlestick pattern. Still the same scenario here. Look at here now, for example, guys. So let us know when the market opened. Okay, when the candlestick opened, then the market went up. Okay, when it went up, so then they rejected the market coming down. When they reject the market, don't forget, guys, that this is the highest high that the market traded to. Then when they started rejecting the market, okay, when they started rejecting the market, then the market started forming a wick. Okay, so when they started rejecting the market, you start seeing a wick. Okay, so if it closed this way, this is the way the wick is going to be there. Okay, but if it traded below this opening price, the market, the candlestick is going to change to red. Okay, so because of what it is now what bearish. Okay, so it has crossed what the opening what price. Okay, so now this your wick also is going to change to red. Okay, so now you see the market literally coming down. Okay, so if it closed this way, this is the way the candlestick is going to be. You see, so all this week before, so that showed that what this week the market has already, the week that that it displayed here, the market has already traded up to that level initially before they rejected the market down. Okay, so I guess you understand the psychology behind the candlestick pattern, how they are being printed. So we are still going to talk more better about it, on how you can use your candlestick as a confirmation, as your entry later on in our next class, guys. So your candlestick is advisable to use for you to use as a trader, okay, so that you can see the clear direction of the market, and also you can use it as a confirmation to take your entry whenever you want to take your entry in trading. Okay, so that is for that, guys, on candlestick. So that is for that, guys. If you need the PDF to each of these courses, kindly click on the link on the description below and download the PDFs, okay? And also don't forget to subscribe to our YouTube channel, smash the like button, and share the video to any aspiring trader that are willing to learn Forex market, okay? So thank you very much. See you guys in the next class.